Modern banking is a fraud. In short, you can think of modern banking as a giant Ponzi scheme backstopped by an enormous counterfeiting operation. So what I mean by that is that all the banks practice fractional reserve banking, which is on its face a fraudulent activity. They're representing that they own something that they don't really own.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Nick Giambruno joins us today. Nick is a renowned speculator and international investor. He is the founder of the Financial Underground and editor-in-chief of its premium investment research publication, Contra Speculator. Nick travels the world searching for lucrative investment opportunities in overlooked markets and specializes in identifying big picture geopolitical and economic trends ahead of the crowd. And we're delighted to have Nick join us once again today. It's time to saddle up and silver up for Nick Giambruno. Nick, welcome back to SBTV. How are you doing?
Oh, I'm doing great. Great to be with you, Patrick.
Glad to have you back. Nick, I want to first start off with what is going on. And I'm talking about what's going on in Nigeria and its attempt to basically force a central bank digital currency called the naira, I believe, on its people. And apparently, it's not going too well. I'll start with this question, though. Is there a global war on cash going on?
Yes, there is. I would change that a little bit. Yes, obviously there's a war on cash. There's a war on money going on right now is more accurate. And governments want to wage war on private ownership of money, private individuals owning money. They want to corral people all into their own government money, which is fake money, which they can create out of nothing. All you have to do to really see through this charade is imagine if a private citizen or a private business did the same thing as a government. It would clearly be seen as fraudulent activity. So they want to corral people into their fake money system. And the war on cash, eliminating cash, even though cash is fake money, all cash is fake money, it's government money. However, it gives you a modicum of privacy. They don't like that. They want visibility into everything they do. It's not enough that you have fake money. You can't just have fake money. You have to be tracked and controlled at every second. That's the idea behind the war on cash. And it's in my opinion, it's transparently an evil and nefarious agenda that hopefully will be defeated.
Nick, I recall India a few years back removing some of the larger denominated notes, and Nigeria, they also did the same. Larger denominated notes had a deadline to be turned in, and the government gave them new ones. What is the strategy of governments removing larger notes?
Well, it's a long pattern. It's not just Nigeria and India. Yeah, what is that? It's all part of the war on cash because in both cases, they're trying to move people into electronic forms of payment, which they can better track and control. It's all about power. Track and control their citizens. It's awful, but it's not just Nigeria and it's not just India, even though it is happening there too. The European Union phased out the 500 euro note. That was a pretty large bill up until recently with the inflation. But the people also forget the United States. The largest bill in the United States is the $100 bill. And that's been that way since 1969, I believe. And in 1969, there used to be much larger bills. A $500 bill, a $1,000 bill, a $5,000 note, and I think a $10,000 note in the United States. And that was in 1969 when they were worth a lot more. We've had decades of currency debasement since then. But they've all been phased out. And so $100 today is worth like $12 in 1960, not even $12, less than $12 in 1969. So that is inflation is part of the war on cash because if they don't issue larger denominations, the currency debasement is making those what exists, what's left, worth less and less, and we're seeing that now. It's part of a bad trend, and then you see all these other countries too. I think Singapore has a large denomination bill. I think Switzerland does too, but then they get on all sorts of blacklists and pressure. So the global parasites, I don't like to call them elite. They're not really elite. They're really parasites. The global parasites don't like large denomination bills, even if it isn't fiat money. Hey, they should be happy that people are taking fiat money. I mean, come on, don't get too greedy here. But no, that's not it. They want not just fiat money. They want total digital enslavement too. So that's what they're going for.
You're correct where Singapore did remove the $10,000 note. You know, Nick, Nigeria, though, is extremely important in the global economic community. It has a very young population, and economically, Nigeria, it is one of the fastest growing nations in Africa. Now, with these things going on for Nigeria, would you say Nigeria has found itself at sort of an epicenter of a CBDC test case?
Of course. So we're talking about the global elite and parasites. What they do is they always find a test case to test their plans before they scale them to North America, Europe, and beyond. And we saw this in Cyprus too, when they did the bail-in. That was the test case there. And we're seeing this now in Nigeria, where they're really doing everything they can to promote this CBDC. And all sorts of things. So I think if you're concerned about this stuff, and anybody should be concerned about this stuff, anybody who has any sense of dignity and self-sovereignty should be concerned about CBDCs. You got to be following what's going on in Nigeria, because they're gonna when the governments are gonna impose a CBDC in your country, in your neighborhood, they're gonna reach for the same playbook that they're using in Nigeria now. So that's why you really want to pay attention to what is going on in Nigeria.
Nick, I've seen some reports where Nigerians, they're getting pretty upset and they want their cash back, not a CBDC. They want their fiat cash though. Is it possible for them to demand cash back in the system? And even if they get cash back in the system, is cash, and again, it is unbacked fiat cash, is it really a long-term solution for them at this point, or any of us at this point?
No, it's not. And it points to a bigger problem, which most of humanity doesn't know what good money is. It's really a bizarre thing if you think about it. Everybody uses money every day, but most people don't really know what it is. They just thoughtlessly accept whatever the government gives them as money, which is kind of ridiculous if you just sit down and think about it for a second. Why would you accept as money whatever the government tells you is money? It's absurd. And money is not a hard thing to understand. All it is something that you can use to store value and exchange value. It's not that complicated. And people have used money for thousands of years, different things for thousands of years. There's no reason at all that money needs to come from the government. This is a total misnomer. I mean, it's such a warped mentality. It reminds me of, you're talking about people who used to live in the Soviet Union, and you said, well, where do shoes come from? And they say, oh, the government makes the shoes. Who else could make the shoes? Like, they couldn't conceive that anybody else could make shoes except for the government. And it's the same kind of mentality here, except it's much more prevalent. It's prevalent in so-called free societies in the West, North. It's in the whole world, Nigeria included. So, that is bad when most of humanity doesn't know what good money is. They have no idea what it is, or what makes for good money, or what makes for bad money. So this is going to cause a lot of problems, and a lot of turmoil and chaos. We're seeing that in Nigeria, but actually the Nigerians, which is a ray of hope, they have one of the largest adoptions of Bitcoin, which is a very important thing. Now, we can talk about the huge differences between Bitcoin and CBDCs. And a lot of people conflate the two, but they couldn't be more fundamentally different. In any case, the Nigerians have rejected their CBDC. The adoption rate is about 0.5%, or about 1 in 200 are adopting the Nigerian CBDC. And that's after several very important things. First of all, it wasn't just coercive measures. The Nigerian government offered all sorts of discounts to use the CBDC. Imagine getting a discount at the pharmacy or the grocery store. They tried to do that. Then they tried more coercive measures. They took cash out of the system, like you're talking about, getting rid of those high denomination bills. They instituted harsher capital controls, which means you can't move money out of the system, and all sorts of deposit or withdrawal restrictions, banking restrictions. And this is not good. And they're having record inflation. Nigeria is having very high inflation right now. So I think anywhere you are going to get and why, that's not surprising. What do CBDCs do? They make currency debasement easier, even easier than printing it on a printing press. So you're going to get these things. You're going to get capital controls. You're going to get currency debasement. You're going to get bank restrictions. You're going to get cash restrictions. They're going to remove cash from society incrementally. And you're going to get social unrest because it's like baking a cake. It's like you put eggs, you put flour, you put sugar in a cake. What do you expect is going to happen? Same thing here. You do all of those things. What do you expect is going to happen? People are going to get pissed off. They're going to go in the streets, and they're rightfully pissed off. So yeah, CBDCs are just from top to bottom a disaster for everybody.
If you're enjoying this interview with Nick Giambruno and I, please consider subscribing to our YouTube channel to let the algos know you'd like to see more content like this. And if you would like to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. Yeah, within that you mentioned the capped withdrawals, and I think they're down to like $45 a day when it comes to withdrawing money from the banks. But since you mentioned there are differences between, let's say, Bitcoin and a central bank digital currency, what would some of the key differences be?
Sure. Well, to make it as simple as possible, just imagine Bitcoin as a digital version of gold. It takes all the properties of gold that made gold good as money. Namely, it's resistant to debasement. And gold, nobody can just get up and make more gold. And that has made it a good store of value, which has helped its store of value is an essential function of money. So that is why gold is a good store of value, because it's relatively hard to debase it. And to be even more specific, the annual production is insignificant compared to existing supply of gold. It's like 1 to 2% at most per year. That's pretty, and it's been pretty consistent. That's pretty insignificant. That's a way to measure the hardness, or how hard to produce a certain commodity is. Gold is the hardest of all commodities. That means its supply grows relative. The new supply grows relative to the existing supply at the smallest rate. No other commodity is even close to gold in that regard. And Bitcoin replicates that very, very desirable characteristic. Because nobody can make more Bitcoin than 21 million. Nobody can make more than that. The Chinese government can't, the US government can't, Elon Musk can, and even if all these guys got together, they couldn't do it. And even if all the Bitcoin insiders and Bitcoin corporations got together, they couldn't do that. Now, that is not true for every other cryptocurrency. Every other cryptocurrency can be easily changed. Look at Ethereum, which is the number 2 cryptocurrency. The Ethereum people change their monetary policy more often than the Federal Reserve. So that's not real scarcity. It's all the other cryptos have artificial scarcity because somebody can change it. And it's like frequent flyer miles. How many Delta miles or Singapore airline miles? It's as many as the Singapore airline wants to make, or as many as Delta Airlines wants to make. Same thing with these other cryptocurrencies. They have fake scarcity, artificial scarcity, but Bitcoin has genuine scarcity. It has true scarcity. That's the fundamental difference, and that's why it's suitable as money, as good money. Because nobody can change it, and it allows it to fulfill. Now, it is volatile. The price is obviously volatile, but that's just a function of its very, very relatively low adoption rate. It's like less than 0.5% of the entire world owns Bitcoin. I expect that to smooth out as it gets more adopted. Nonetheless, even with that volatility, Bitcoin is a far better money than the Nigerian naira. I mean, what do you have with the Nigerian naira? You have insane amounts of inflation, debasement. You have all sorts of restrictions on how you can use it, and you're forced to use the CBDC, which you can't do this. You have to get the government's blessing for this. So this is like a big fat advertisement for Bitcoin, and that's why we're seeing. I mean, think about it. If you're going to have to use a digital currency, you'd much rather use Bitcoin than a CBDC, and that's exactly what we're seeing in Nigeria, which has one of the highest Bitcoin adoption rates in the world. So in short, Bitcoin is a free market form of money. I know it is. People have a hard time wrapping their minds around it because they think it's digital. Just because it's digital doesn't mean it's at all. That's the only thing it has in common with the CBDC is that they're both digital. But that is where every other aspect of it is completely and 100% diametrically different than a CBDC. So that is actually a very it's a ray of hope. So hopefully the Nigerians will become wise to this and adopt a better form of money as a result.
Yeah, Nick, why do governments fear the anonymity that cash offers? Let's say that even maybe Bitcoin offers. I mean, people say cash offers freedom, Bitcoin offers freedom. The government say cash offers illegal activities to take place. I mean, have our governments are they turning a bit tyrannical here?
Oh, certainly. It also enables government illegal activity. What do you think the CIA does with all physical cash and bringing buckets load of cash into Ukraine, Afghanistan? They're not doing good stuff there. I promise you that. So, no, I mean, but it's a tool. Cash is a tool. It's like a hammer is a tool. Yes, I can build a house with a hammer. I can also hit somebody over the head and kill somebody with a hammer. It's about how you use the tool. And it's absolutely ridiculous that they say these things. They can say the same thing about, oh, cash is used for bad things. Yeah, well, you know what? Bad guys also wear blue jeans and they wear sneakers too. So this is actually not like in terms of like this isn't even very good propaganda. Like their propagandists, they got to think of better. They got to hire somebody new because this is like really low grade stuff that only works on people who can't think for themselves.
Okay, and something else in the news that we're seeing happening over again is what's going on with SVB. How did it happen, and where do you see the fallout heading? I mean, what are your thoughts on what's going on with SVB?
Yeah, well, in short, modern banking is a fraud, and I'll tell you why. I mean, it's in short, you can think of modern banking as a giant Ponzi scheme backstopped by a enormous counterfeiting operation. So what I mean by that is that all the banks practice fractional reserve banking, which is on its face a fraudulent activity. What that means is that they're representing that they own something that they don't really own. In that case, your bank deposits. So if even a fraction of people who have money in a bank showed up and said, "I'd like my money, please. I'd like to withdraw my money, please," the bank couldn't honor it because the money isn't there. They've loaned it out. They've done all sorts of other things. Think of this practice in any other industry. Like think of a fractional reserve car dealership. I mean, it's ridiculous. It wouldn't work. You couldn't sell more cars than you have in inventory, and it's a fraud. But somehow people think it's okay and normal in banking. And it does work in banking to a degree. It works for a little bit. But that's because there's something called the lender of last resort, central banks, which is the enabler of this scam. Because when you have this pyramid scheme, which is lending out more than creating more claims on something than really exists, which all banks do. And then if somebody are starting to cash in those claims, well, the lender of last resort can just counterfeit the currency and create more currency, and there you go. So that kind of helps keep the system going. But it's all banks have this fundamental problem. It's not just the Silicon Valley Bank, even though that's in the news. But what specifically made Silicon Valley Bank insolvent, they had, and this is another thing, I mean, there's so much BS, honestly, in mainstream finance. Well, they bought a bunch of quote unquote risk-free government bonds. So what happens when the Fed raises interest rates, it makes the value of those bonds go down. So the Silicon Valley Bank depended on the value of those bonds as like part of their capital to redeem deposits, which they view as liabilities. So if the value of their assets are going down, that really hinders their ability to meet their liabilities, their deposits. So they bought a bunch of supposedly risk-free bonds, and then the Fed started raising rates, and that created the bond values, and then they didn't have enough capital to meet their liabilities, i.e. their customer deposits, and then they became insolvent. I suspect we'll see this with a lot of other banks too, because they're not risk-free. I mean, this is again, who believes this stuff? Like you just need to take a couple of minutes of research to figure out that this is not risk-free. There's tons of risk. So yeah, it's just sad. Most people are lemmings and they really just believe whatever the talking heads on TV or the Wall Street Journal says. But yeah, all these banks are fundamentally unsound. And it's just a matter of time before it happens to your bank, I would say.
Yeah, I have to bring up Silicon Valley Bank because with cash, governments basically are telling us what is money. And then again, with bonds, governments are basically telling us, "Hey, have faith in us. We're going to give you your money back and things like that." But with Silicon Valley Bank and with these bonds, um, if buyers of bonds they're taking on some pretty steep losses, and I gotta bring this up, where would this mean then a bond buyer like perhaps say the Fed also be in trouble of possibly becoming insolvent?
Well, that's yeah, if it was an institute of the free market, but it's not. It's like if you're playing a game of Monopoly, can the banker go insolvent? No, he just creates more money. So the Fed can't. Yeah, if you have think about it on a personal basis, Patrick. If you had a money printer, could you become insolvent? You couldn't. You just print more money. So, but until the currency blows up, and that's effectively what we've got going here. I mean, it's counterfeiting. It's fraud. I mean, they're stealing from savers. This is no I don't know why we shouldn't use the language of these people, because really they're all wrapped in euphemisms, and it doesn't describe what is really happening. They're really just a bunch of criminals who are stealing from everybody, and they use all sorts of words to hide that, like lender of last resort, quantitative, all these euphemisms. So no, they're just engaged in a giant criminal enterprise, and just the fact that they're close to the government and wear suits shouldn't give them any credibility.
And I got to ask this other question also, because we saw this happen in part with the UK gilt. What about pension funds and things like 401ks that went into US treasuries? Could they be in trouble as well?
Absolutely. Now, it's not just the value of the bond. Bonds are a horrible investment, I have to say. Fiat money bonds, like I could not think of a worse investment. I mean, maybe I could, but they're just terrible. First of all, a bond is a contract. It's denominated in a fiat currency that's almost guaranteed they're guaranteed to be debased. So why would I want to buy a promise to be repaid in something that's going to be debased? It's like, would I want to be promised to be repaid in Argentine pesos 2 years from now? I don't think so. I wouldn't want that take that. And all the other currencies are it's the same thing, just a matter of degrees of difference. So that's a horrible thing in the first place. People don't even realize, and the inflation is obviously much worse than all the government statistics. We talked about that. But then there is the value of the bond risk, that if value of the bond is related to interest rates. Inversely. So if interest rates go up, the value of the bond goes down. So even if there is no currency debasement, and you're at the whim of what the central planners decide for interest rates. So I don't want to be at the whim of the committee, the FOMC, and these central planning bureaucrats. I don't want to be at the whim of that. So yes, but nonetheless, it's again another thing of mainstream finance, and it's sad because a lot of retirees are depending on bonds. And a lot of retirement funds, pension funds are full of these things, and these are awful. They're not going to be getting what they think they're going to be getting, and it's going to be an unhappy time for a lot of retirees as a result.
Right. Unfortunately. Nick, do you think we're going to see bailouts on the way?
Oh, we already are. I mean, look, what happened with Silicon Valley Bank is a bailout. I mean, again, these people are professional liars. Central banks and government officials, they're all liars. I mean, don't give the U.S. government any credit. They're no different than the Argentine government or whatever government. They're all a bunch of liars. So when they come out and say there's been no bailout, there has been a bailout. They bailed out the depositors. So basically what is going on now, what was probably the next step is the FDIC, the deposit insurance, which is another scam in the first place because it insures about less than 1 penny of deposits available, so it's a fake sense of security. Anyways, the FDIC has a limit of $250,000 that they insure. But now, the Silicon Valley Bank, there's a lot of deposits over $250,000, and they're being made whole, despite that there's supposed to be this limit. So that is a bailout. That's a bailout for those people. And it also is creating an enormous moral hazard too, because now people are there are whispers like, hey, let's just do away with deposit insurance and insure all deposits. And how are you going to do that? You're going to do that with the money printer. So I think that's the next step. The next step is going to be to insure all deposits. It's just going to be all backstopped by currency debasement. And that's why I think the most important trend, no matter what happens, and what they call it, the most important investment trend of this decade is currency debasement, because I think it's unstoppable. No matter what happens, they're going to turn to currency debasement. Just this is a perfect example of it, and I think we're going to see a lot more of it.
So yeah, CBDCs are on the way. Nick, CBDCs on the way, and we see these things going on even with bonds. So money that we're supposed to trust, and then again with government promises that we're supposed to trust in bonds. Nick, how do we hunker down and hold ground against the CBDC government push? And can we avoid it?
Well, you want to hold other forms of money. Gold, silver, and Bitcoin are my favorites. I like them all. I think they're great. They all have their purposes, but Bitcoin in particular is going to be very important because that's going to allow you what Bitcoin has that is an improvement over precious metals is that I could send it to you, Patrick, in 10 seconds, and you could have receive. I could send you value in 10 seconds. And nobody can stop it, and it can be anywhere in the world. So its portability is much better. I think that's apparent. So I think it's incumbent upon people to learn how to use this technology. You really got to learn how to use it. Number one, stay away from all the other altcoins. They're just all garbage. I mean, I'm just trying to save people time. They're garbage. There's nothing interesting about them. I mean, you can gamble with them, and good luck to you if you want to do that. But the real innovation is in Bitcoin. That's where you want to put your attention. And on my website, on the Financial Underground, I have a guide on how to use Bitcoin in the most private and the most sovereign way possible. So if you go to financialunderground.com, you can find that guide. So I think that is going to be very important. Have a stash of precious metals, physical precious metals, none of this paper derivative junk. I mean, that's just fiat money, the fiat system papered onto. You don't want that. You don't want that. So you want the real physical stuff, and you want to know how to use Bitcoin in the most sovereign and private way possible. And that will allow you to exchange value with other people, which is the basis of an economy. So you can live in the well, if they're first of all, I don't think CBDCs are viable over the long term, maybe not even over the medium term, or even the short term, as Nigeria shows us. It's not even viable. I don't even think it's going to get off the ground. But God forbid these things do get off the ground. You're going to have to learn how to live in the parallel economy. You're going to have to learn how to live in the underground economy, because unless you want to sell your soul and your dignity to these people pushing these CBDCs, you're going to have to learn to swim in these waters, and you better know how to use precious metals and Bitcoin. Don't wait. Learn how to do it now, so that when you have to use it, it's not a scramble, and you'll be much more comfortable.
All right, Nick Giambruno, before we wrap up, can you let people know how they can follow you on social media and what else you do at your publication, The Financial Underground?
Certainly. Well, yeah, like you said, you can go to financialunderground.com. I'm also on Twitter at Nick Giambruno, and I'm also on Noster, which is a open source, decentralized social media platform. It's new. I suggest people check me out on there too. But what I write about these things. I mean, our byline at Financial Underground is uncovering the truth about money and markets they don't want you to see, and that's what I try to do every day. Specifically, I look at the most important investment trends and how to get positioned in those investment trends for profits and for protection. This is going to be a very volatile decade. But it can also be a decade where you can make a lot of money if you get the trend right. And so I want to be at the forefront of that, and you can find out more at financialunderground.com.
All right, Nick Giambruno, appreciate the time you've given us. You've given us a lot to actually think about and look ahead to, and ways we can sort of hunker down and protect ourselves. So I appreciate that. And I really hope we can do this again soon.
Sounds great, Patrick. Anytime.
That was Nick Giambruno from the Financial Underground sharing his views on CBDCs, Silicon Valley Bank, and more. To see more of Nick's views, please visit his website, financialunderground.com. If you like this video, please subscribe, share it, and give us a thumbs up. We truly appreciate every bit of support you can give us. It goes a long way. Audio-only versions of this interview can be found on iTunes and Spotify.